We've seen unemployment continues to be one of the most burning macroeconomic challenges facing Nigeria today as population growth continues to outpace output expansion. The number of people seeking jobs keep rising. We've had a number of interventions in the development finance space, but pace of job creation is still not up to par. Let's talk to Professor Joseph Nana, Chief Economist, Development Bank of Nigeria, joining me from our Abuja studio. Great to have you on the program. Good morning and happy May Day.
Good morning, Glady. Happy May Day to you too and all the workers out there.
Yeah, who keep working. Thank you so much. Well, we've seen unemployment rate now about 33% from the last data we got from the MBS, and it's projected to hit about 40.6%, projection by KPMG in 2023. How would you gauge the impact of development finance intervention so far?
Okay, good question, Laddie. So the development finance space broadly is basically here to come in where there might be market failures, meaning where less access to finance is provided to players in the MSME ecosystem. To that end, every development finance institution have their own mandate. For example, my organization, Development Bank of Nigeria, we're a wholesale bank, which implies that we have to pass our funds through commercial banks, microfinance banks, and other intermediaries to get to the micro, small, and medium enterprise players. As such, while we understand the profitability and sustainability angle is important to all financial institutions, but to be sure, development finance institutions are basically here to create and provide some level of development outcomes, development impact for greater good. And while profitability is key, that's a financial aspect of it. The non-financial aspect, in my mind, should be what we are selling as an ecosystem. For instance, let me just give you a couple of nuggets here. Capacity building, because we are a wholesale bank, we care about how the ecosystem is being developed. For example, the ecosystem level in terms of policies coming down that might affect SMEs, the PFI, that's the participating financial institutions, these players who we have to unlend through to reach the MSMEs and ultimately the MSMEs themselves. So what we have done broadly as a bank, and other DFIs are actually doing this in different ways as well. I will tell you from the DBN lens, we are building the capacity of our partner financial institutions from the lens of being able to look at their SME finance strategy, see their SME portfolio to see if it's robust enough, to look at their ENS, that's environmental and social risk management, and so on. So we have partnered with Frankfurt School of Finance and Management to deliver these high intense, if you will, lectures and trainings to basically help our ecosystem develop, to give MSMEs greater access to finance, because the DBN is to provide as a catalyst. We are the catalyst to essentially to provide greater access to finance. And to achieve this, we have to ensure that our partner financial institutions have the muscle power, the elbow room, and the understanding to essentially help deepen their respective SME portfolios within their banks. As such, right now we have been in partnership with 10 banks right now, and we've trained over 300 or so staff of those banks in an array of different things. So, for example, we know for the MSMEs, for example, we know collateral could be a major challenge. And commercial banks largely have begun to they focus on collateral as a requirement, but more importantly, they're looking at cash flow-based lending, meaning if you have a positive cash flow, they will likely take a risk on you to ensure your businesses can grow. So that's one aspect. But other aspects of capacity building from a PFI level is an environmental and social risk. And our risk management tools, we have partnered again with Frankfurt School of Finance and Management to help deepen and help our PFIs, that's the commercial banks as well as microfinance banks, and let's not forget our merchant banks, to basically help build up and help understand their environmental and social risks to ensure that what we are providing, the finances we're providing, it's being used judiciously and used to fund credible businesses that are not of climate risk to the economy and so on. So I'm looking more on the non-financial aspect of our ecosystem, because in the end, we need a handshake to ensure that profitability continues to grow in our ecosystem. I'll pause there.
All right, and definitely we know access to capital is critical for businesses and startups. But with the battle against inflation, we've seen rates get to levels not seen before globally, and right here too in Nigeria. So cost of capital is rising. What is the way around this?
Cost of capital continues to rise all over the globe. The U.S., the Fed fund rates continues to inch upwards, and whatever happens in the U.S., by and large, will happen in Europe, and so on and so forth, and ultimately crystallizes in Nigeria. Having said that, inflation continues to inch upwards, which reduces the purchasing power of households as well as MSMEs. Notwithstanding, beyond that, we have seen the financials of a lot of the banks, a lot of the organizations, whether they're in the oil and gas sector or whether they're in the financial sector and what have you. In the end, profit still is being derived by all market participants. So even though inflation keeps inching up, we know there's still profit to be made. And if there's profit to be made, then access to finance should be at least be given to these players to grow their businesses, especially during the COVID-19 era, where we saw lack of access to finance occurring. We witnessed and observed a lot of businesses shut down temporarily and some closed. These hardships had a huge impact on the households that these SMEs have to operate. Now, if we are looking at an ecosystem where finance is available for all, does it mean all the business plans are viable? That's why we still look at the non-financial aspect as important. So DBN partners with a host of different educators and trainers and consultants to bring and perhaps, if you like, build the capacity of MSMEs to help them understand and judiciously use debt efficiently. Because if you can use debt well, then your business has a chance of growing past 2, 5, perhaps 10 years. So I sincerely see access to capital as a difficult task, but if your business is viable, I suspect have all the soft skills you need, have all the paperwork required, do your due diligence. Access finance through your commercial banks, microfinance banks, and so on. Look at the eligibility requirements. If you tick all those boxes, my sincere belief is you will get access to a loan. It might be small at first, but once you show your resolve to repay back the loan, you gradually build up your credit profile with that institution, and ultimately greater finance is provided to your organization and so on.
Definitely, it's Workers' Day now, May Day, and we're celebrating workers globally. But we know workers are going through a lot, with inflation, wages not, matching up with inflation at this time. What do you think is the way to help workers, at this time? Because we know the businesses are struggling, to get to do business at this time and even get money to be able to pay the workers. So what would you say is the way for workers to go at this time, to help themselves in a situation where everything is tight, at this point?
Yes, and everything is actually tight. A lot of business owners are basically pinching pennies, if you will, to essentially ensure that they are profitable so they don't have a problem of closing down their business and laying off all their staff. Notwithstanding, I sincerely believe that if you look at what the federal government has said and is currently trying to implement regarding the 40% hike in wages, that should help somewhat. While they excluded doctors and medical professionals, I don't know the reason behind that. But I sincerely believe if your business is profitable and you know workers are the ones who helped build your business, it is only right, is only appropriate, and is the prudent thing to do to hike up wages. But to be sure, the issue here is this: you cannot increase wages as well, because if you continue to increase wages, in the end, you're still going to chase inflation. Because as wages go up, more money comes into hands of businesses, inflation still drives up. Because the issue with inflation is not just endogenous, it's also exogenous. And the cost-push inflation is what's driving a lot of this activities within the country, lowering purchasing power for households and MSMEs. So employers alone cannot solve the problem. Government, as well as private sector, need to have a meeting of the minds and a handshake across to ensure that everybody is putting things together to grow the economy. I don't see inflation to be the long-run problem for Nigeria, because I see inflation tapering out after a while. But ultimately, we still have to go back to what is causing our issues internally. It goes beyond inflation, it goes beyond money supply, it's structural. If you look at fuel subsidy, if you look at the tax regime, if you look at the ability to create the revenues for the country. So all these play a role. If we don't produce anything, then you can't export much. And if you can't export much, you don't get the foreign reserves that you would like to bring in, and so on. So it's a complicated situation, and it takes a delicate balance to actually iron out all the issues. Notwithstanding, the folks in this administration and the incoming administration, I suspect, have their eyes on the target, and I suspect they'll hit the ground running, because in the end, this cannot be sustained in the medium or even the long term. At some point, we have to look inwards to begin to see how we can shape a positive and inclusive country going forward in terms of access to finance, in terms of households and MSMEs getting the appropriate care they require. Look at the statistics. 41 million MSMEs are in the country. They create more jobs, they provide more revenue for the government, and so on. But yet, they are the ones who are challenged with accessing finance. So you can imagine, once you can reform, restructure, and understand this ecosystem, then we can honestly see growth as we would like to see for the country.
Right.
I'll pause there.
Right, so much for the incoming government to do at this point. Hope they hit the ground running. Thank you so much, Professor Joseph Unana, Chief Economist, Development Bank of Nigeria. Thank you for your perspective today.
Thank you for having me.